2014 tax budget hearing. And at this time, I'd like to just give a brief overview of the tax budget. And then I'm going to ask the municipal manager for comments. And then it will be an opportunity for residents to address this hearing with any comments that they have. When recognized, I ask that you state your name, your address, and limit your comments to 5 minutes. If you have comments that last longer than that, I ask that you send those to us in writing. As an overview of our tax budget for 2014, this is our proposed income and spending plan. And this is the plan for your tax dollars, the money that you have entrusted with us, so we take this very seriously. This is not just a formality. And I've said before that this is a difficult process because of time frames. We're actually going to be budgeting money that may not be spent for as much as 18 months from tonight. So it's difficult from a timing standpoint, and it's a difficult process from an information standpoint because we are required by law to pass this by a certain date, yet some numbers we don't have authoritatively from the sources that we need them from, so we make our best estimates. This budget does not authorize spending of any money whatsoever. That happens with appropriations bills. This is just our spending plan. The second part of the process to spend money is a appropriation bill. This is a budget that is better than a balanced budget. If the revenue comes in as projected and if we spend as projected, our end of the year balance will climb overall. Our budget is divided up into several funds. The first fund is the general fund. We project them, and I'm going to round off to the nearest $1,000. We project $1,664,000 in income or revenue and $1,480,000 in expense for a positive balance for the year of $184,000. Said another way, we are only going to spend we are only planning on spending 89% of what we project to receive. And part of the reason for this is to build some fund balances in certain funds. As we know, we have higher expenses in future years. For example, if we want to continue to finish the paving job on Winton Road, we have to accumulate some funds to get matching funds to do that whole thing. We can't accumulate enough funds in 1 year, so we get a running head start. Let me talk about the income side of the general fund. About 60% of our income comes from income taxes. 21% comes from real estate taxes. 7% comes from fines, licenses, and permits. 6% for charges for services. And then another 6% from the all other category. If you look carefully at our general fund proposed spending in this budget, it's an increase in spending of 0%. Rounded off, it's a 0% spending increase. On the expense side, we have fully funded all the raises that we did previously this year for next year, and we have not shifted anything to our employees in the form of higher percentages for their health insurance, which is the very big expense once we get past salaries for the employees here at the village. So that's kind of a little overview of the general fund piece. In addition, we have 5 what we call special revenue funds, and those are funds that obtain their revenue from basically from levies that have been passed. We have a recreation fund, special revenue fund, a police operating special revenue fund, a fire contract fund, a fire equipment fund, and a bond retirement fund. So those are smaller funds that are not included in the general fund that make the rest of our budget. And then the last piece, most governments have some public debt. We call those bonds. We will have an outstanding balance on January 1st of 2014 of $3,381,000 in debt, in public debt, and our 2014 principal and interest payments on that outstanding public debt will be $648,300. So that's a little overview of our budget. For people that have looked on the website and seen our budget, we've made, I think we're at the 4th iteration that we've produced publicly. And as new information becomes available, we have made adjustments through the process. We try to get it out early to folks as possible. And the latest iteration was put up 48 hours ago, roughly. And there are some small changes from what was out previously, but there's nothing from a large standpoint as far as additional spending or additional revenue. Just a couple of notes. This is the first budget where we have nothing allocated from a income standpoint from the inheritance fund, and we again are seeing significant decreases in the local government fund on the revenue side. So that's kind of my overview. I asked the manager to comment on some questions that she's gotten from the public already, or further explain just a couple of items. So I'm going to turn it over to.
Great, thank you. And actually, you did a great job of it, going through it, so thank you. And as Mr. Dree said, the changes that are in this particular draft are all on the revenue side. We did have a breakdown now on property tax versus the real estate allocation. So you'll see some figures in the property tax allocation that you did not previously see, and that did adjust the figures under the real estate tax category. So, and that is throughout. That you'll find that on almost every sheet, with the exception of the debt. So I would like to go. We got some great questions, and I think just going through those would be a good way to summarize and kind of fill folks in. You know, we look at this all the time, and it might make sense to us, but it's can be kind of a foreign document to others. So I would like to some time to go through it. We have in the general fund, a category referred to as lands and buildings, and this is basically our a lot of the work that our service department does. In that particular fund, which you would see if you have a copy in front of you, under the 1,000 general category, about halfway down, there's one called lands and buildings. There's a salary category and an other category. And in the other category, there's about $144,000 that I've identified that would go towards like storm sewer repairs, catch basin repairs, sidewalk repairs. We are going to need a new HVA system in here. It would go towards that. And any other large facility expenses, facilities being roads, buildings, whatever, lands and buildings. That's what we would use that particular funding for. None of the funds in there are going towards our apartments. That's handled out of its own category. So it is exclusively our, kind of operational facilities and land that we have.
What is the title of that other category?
For the apartments? That would be back on probably the second to last page. You'll find it's a sideways sheet. Exhibit 3, it's labeled as Exhibit 3 as a special service fund, and apartments are about, well, they're the 4th item listed, 2904.
Thank you.
Okay, and right now another question was the apartments. Right now we do have them, so they are paying for themselves. I think this was the first year we didn't have to transfer money from general fund to pay the taxes, although we were doing that as an advance and paying it back as the revenue came in. But we've lowered our revenue, but we've also lowered our expenses associated with the apartments right now. Other community environment, if you saw that category, that is actually the post office. So those are line items that cover the post office, and that is salaries there are about $27,600, and then the operations there is about a $9,800 charge that we have each year, and I have no increase in that from the previous year. The transfers out are always a little bit confusing. That line item this year totals $421,177. That would be at the bottom of the first page under the general fund. And that figure is made up of, if you refer to the very last page of your packet, you'll see the debt, Exhibit 6, which is the debt service for the village, and the amount required for principal and interest. Under non-voted debt, you'll see $371,177, and then I have put in $25,000 to be transferred to the pool and $25,000 to the golf course. That, of course, by the final appropriation can be something that we do different, but I kind of wanted to put a little place card in there to hold that kind of funding for those three categories. So that should total up to the figure you have, the $421,177. And then there's a $25,000, which is strictly a contingency. There's no identified amount for that at this point in time. That's just if something comes up that we did not anticipate, that would be a source. Heaven forbid, some kind of emergency, but you never know. That would be money we could turn to if we needed to. We have another fund, the 2011 special revenue for street construction, maintenance, and repair, which would be the second page of your tax budget. This is the one Mr. Dries was mentioning, the funds that we use a lot for matching funds to get grants. The Winton Road, we're going to be using some this year, not out of this one, but for Farragut and a couple other things that I'll mention in a little bit. But we did have one question at the top of there. It shows an adjustment for 2013 of $14,794. And I believe that reflects a charge to that account that was then reimbursed by a grant, portion of the OPWC grant, which we thought we had closed out at the end of the year, but there was in fact additional money that came to us, so that canceled that expenditure out with the revenue that we received. Another one is our recreation account, which is the next page, 2041 special revenue. This particular account for our $70,000 that I had identified for this particular year, we have had actually a number of very exciting expenses. We pay for our one-call system out of there. We did buy a new diving board this year. That was $2,500. We bought the golf ball dispensing machine, which was roughly $4,500. The question on the Hilltop seniors, we've probably only spent about $1,200 on them. It's not as much as we had anticipated. Those expenses have gone way down. At this point in time, we have not made any payments to the Gators out of that funding. Our biggest one is the new playground, which has broken ground, and that's a total of about $55,000 that's coming out of that amount this year. For next year, I simply indicated $15,000 and $15,000 to total the 30. Just that, at this point in time, we don't have any specific items identified for that. You know, I know there's some lots of additional recreation things we'd like to do, and that money, will be used for those items when they're identified. And then if anybody has any questions, let me know if I go through this too quickly. Another big account, the 2901, is the police operating account.
Can I just mention one thing? I hope that we also start to think, and not that we don't, but that it's more evident to all that we think in terms of sustaining what we have. I know that you guys were looking at maybe fixing some of the fence on the tennis court and that kind of thing. It's good to have that money, but I also think oftentimes, like we're experiencing across the nation with bridges and everything else, it doesn't hurt to be forward thinking with some of that, if that makes sense. But just planting a seed, I guess.
Mm-hmm.
Okay, the police operating account, that pays for a large part of the police operations, but it does not pay for all of it. We also have some general fund money. Again, if you look back at the general fund page, that first one, the very first two categories under expenditures, total $220,118 for some of the police expenses, and then the rest of it, we always try to put the most into the police operating, and that's midway down on the police operating account. You'll see the 506 501 that we're charging to that. We are leaving a balance of 40,000, and there's a couple reasons for that. First, there's a chance the estimates are wrong. I think it might have been last year that we actually took in less than we thought in each of our levies, which was kind of scary, so it gives us a little cushion there. We're also having some additional personnel expenses this year in terms of we've had some officers leave, which means we have to work some other officers overtime. We're making some cash payments for our interim chief, things like that, that I just thought it was wise to leave some money there. We're likely to have to appropriate it, so wanted to have a little cushion. Our fire, our 2902 special revenue fire contract, which is the next page. The bulk of this goes to the fire department. However, in the capital outlay, this account, as well as the fire equipment account, have been making some payments towards the fire trucks and an ambulance. The last payment for the $17,750 that you see there will be in 2015. So we're coming down the home stretch on that, which is a good thing. That's a great thing. So those are for vehicles, and the payments will end in 2015. We have to split them into the two because there's not enough in the equipment to handle both, so to handle that total payment. So we take part out of the equipment and part out of the contract account to pay for that. Any questions on that one? Then if we go to the golf course, that Exhibit 3 again, we had looked at that a little bit ago. This sheet might look a little different from your previous one. We've taken out any, for convenience of council, we had 2013 in there at one point. Those have come out now, and we're looking exclusively at our 2014 projections. And we have some questions regarding the golf course, which does show some personnel expenses there of $5,000. In addition to the contract that we currently have, we are paying for a groundskeeper, and we estimated $5,000 for this year, and I'm estimating another $5,000 for that for next year as well. The rest of that would be contract and any chemicals, things like that that we might need for the golf course. Accumulated sick leave, that account, it's one of those that's it's there when we need it. For a while we were building it because we were anticipating some retirements. Right now we're not like in a build mode on that, so that money just kind of sits and waits till we would need it. That's why you don't see much activity there from year to year at this point in time. And in the banquet hall, I have put in $25,000 in expenses. We have been doing a lot of upgrades, and I would anticipate for next year, I think one of the things we'll have to replace probably at least one of the HVAC units. They have 5 down there. So probably at least one. We were actually able to do repairs on a couple of them this year, and they have an extended life, but probably at least one we'll have to replace, maybe 2. We're also looking into some improvements to the old baby pool area. Maybe breaking that up, taking it out, just making some changes there, possibly doing a gazebo or something that will make that a little bit more attractive for outdoor weddings. But there's kind of ongoing electrical expenses, plumbing expenses, things like that. So the banquet hall though is self-sustaining at this point in time though. We're not supplementing that. Yeah, yay! We're not supplementing that with any of our general fund accounts. So that is great.
The parking lot would come out of those streets and the surface?
Yeah, that'll be this year. Okay. Right. I hope to be able to tap. He asked about the parking lot project that we're going to have this year. We're hoping there might be a balance to tap for that. Okay. Not sure, but otherwise that would come out of lands and buildings. Okay. Let's see, I think I may have addressed, we talked about the operations. The apartment operations are paying for themselves right now to the extent that we're doing repairs and working in the apartments. The post office was covered under other community development, and we covered recreation. So those were the questions that I received at this point in time. So if there's other questions. questions or comments?
Thank you. I think what we'll do is turn this public hearing over to the public. So if anyone has any comments or questions, please proceed to the microphone. State your name and address and your comment.
My name is Thad Willer. I live on Damon Road. My question concerns primarily the bonded indebtedness. The other part of the documents you read pretty much makes sense, but I was looking at the documents regarding the bonded indebtedness, and I was just curious, what percentage of that is self-sustaining to the extent that we already have levies in place to take care of? For example, we have a swimming pool that has its own levy. Now, have you included that in the bonded indebtedness? Because that's already secured. We don't have to worry about it. The money is going to come in for it. What I'm interested in is how much bonded indebtedness we have where there's no security or revenue stream coming in to pay for it except from the general fund. So how many millions are we looking at there?
Should I answer? Okay, if I could just back up to our annual one for the 2014, the $371,000 figure that I gave you, that's the one where we have to come up with the general fund money to pay for that.
To pay for the, which set of bonds? The Councilmatic bonds or the ones for the swimming pool?
No, the swimming pool, the curbs, and one redevelopment bond are paid for by levies, and they total...
And those I'm not worried about.
Okay. Yeah, and the others
out
are...
Out of our total indebtedness, $1,293,000 is secured by voted debt. $2,088,000 is the or the other two bonds.
That's the Councilmatic bonds. Yeah.
Those are the outstanding notes beginning January 1, 2014.
Thank you. Got it. Now, as I understand it, those bonds were purchased and the money utilized to purchase apartments and other real estate in the village for the benefit of the village. Is that correct?
Partially, it was also used for streetscape, one of the bonds. Yeah. A combination of streetscape and some acquisition.
So I'm assuming on the asset side, we do have assets, apartment buildings at some value in the village portfolio then. Is that correct?
Correct.
Yes. And approximately how are they valued at the present time? Do you have them on the books at the purchase value, which at that time was extremely high, or the fair market value they have now? Because otherwise I'm afraid the value of the assets maybe appear inflated.
It's clear that the value of the assets has deflated, just like the value of your house has deflated over the last 2 years.
No argument. I just want to make sure that we...
And in fact, I will share with you, because I think I can...
I'm just curious whether we've adjusted our value for our books to take into account the fact that those assets are of lesser value now.
In 2008, the total value of all real estate, according to the auditor, was $65,407,000 in 2008. In 2012, that same auditor said that the value of the real estate in Greenhills was $53 million. So a $13
of which a small portion was...
Which is a small portion of that. There's no balance sheet here to say... In some ways, I appreciate your question, and we certainly know that we bought something and it's worth less today than when it was purchased in many instances. Not in all instances, but in some instances. But unless we're using our assets for additional debt, it's somewhat immaterial from a budgetary standpoint.
The reason I bring it up is how many of those are saleable, so they become a liquid asset as opposed to as a fixed asset, which would help our balance sheet from the revenue stream side. Because I don't know how many of those apartments are saleable at the present time or usable. Do we have any units now that, for whatever reason, cannot be used, either for health reasons, structural reasons, fire code problems, or whatever? How many of those do we have in our portfolio or inventory at the present time, if you know?
I'm going to guess 24, I believe.
24. So we have 24 units for practical purposes, for whatever reason, are unusable.
Well, I would say, I wouldn't use the term unusable.
Right,
I would say that we have elected not to put additional money into them to turn them into a revenue source at this time.
Correct.
So it's reasonable to assume that whatever we have there, those 24 units are substandard for whatever reason.
They are not able to be rented right now.
That's correct. And any estimate what it would cost to repair those units to get them in a usable position or saleable situation?
You know, it really varies unit by unit. I think we could go anywhere from 5,000 all the way up to 25,000, depending on which unit you look at to repair it.
So would it be better for us as a village then, for some of those units, if they're in bad shape, to destroy them? I hate to destroy a historical building, but it's reached the point we can't afford to keep them. And I was wondering if it would be better off from an asset standpoint to get it down, reduce any maintenance we have on it, and therefore, it's, in the long run, help our general fund, because we can't keep living like this. We have what, 2 million, 2.8 million, as you said,
How many
in the councilmatic bonds, and it's over our head. It's going to be for what, 2020, 2015?
Our bond payments continue to increase until 2016, and then they start to decline if we do not refinance, if we do not take in any more debt.
Okay.
That's on the payment side.
So theoretically, if we sell or dispose of or get rid of some of these, we can use that to reduce at some point in time.
Every time we have sold anything in the last 5 years, I believe that's an accurate statement, we have taken that money, set it aside, not spent it on roads, salaries, or anything, and used it to reduce the debt.
That's good accounting and good business sense, and I'm glad to hear that. What I'm concerned is about the 24 units, so we've got to do
the carrying costs on those are not astronomical by any means. We're not heating them, we're not cooling them, there's no plumbing. We do pay a little bit of property and liability insurance for them, but we're always in a situation where we are evaluating, is this an asset, whether it be, we have I'll give you an example of a unit. It's an N unit on a building where there was water damage to it. There's no kitchen in there per se, so it's not usable. We've elected not to put money into that unit. It is available for someone to purchase it if they want to do the rehab themselves.
Didn't we have
we had an offer, we had accepted an offer, and then the deal did not go through. So we're always in a balancing act of what's the carrying cost versus what is the opportunity to sell it today or in the future.
I understand that, and I agree, except we're also reaching the point probably with some of those 24 buildings, we're going to look at a safety hazard for our fire department if they have to go in there in a case of a fire. Because
I don't think so. I don't really think any of our buildings are.
The fire department chief isn't here, but I'm sure at some point in time, he or someone is going to have concerns about the structure and the structural value of those buildings if they have to do it in an emergency.
I think that's a valid point. We have ongoing, they're fully aware of where the vacant buildings are, and I have a lot of confidence in our chief and his officers with regard to not putting their men at risk for saving property versus saving people's lives. And because we've had conversations about other structures in this village that I don't want to be talking to the spouse of someone that was seriously hurt or killed in a fire and they were trying to save something that money can put back and they can put people back.
And that's not even considering the vandalism factor and someone going in.
And we haven't, to my knowledge, we have not had any vandalism issues in any of those 24 units.
We haven't.
So well, that's up for our new police chief to worry about. You didn't know I came along with a package, did you, Neil?
That's okay.
I'll give you about 30 more seconds if you have any other comments.
I'm done.
Okay, thank you. And I appreciate your comments.
Hi, I'm Diana Kohler. I live at 53 Ilona, and I wanted to thank Yvonne and council, especially Yvonne, for addressing my questions. They were very well answered, and I don't have any additional comments on that subject. I appreciate all the effort and work you put into the budget, and I understand the difficulty in working this far in advance. So that was my comment on the budget. I did want to make a comment also on Mr. Willard's comment as far as the units that the village owns that are vacant. I am opposed to demolition of these units. I would hope that there would be some other method of taking these units into a usable manner, whether it be the village doing it or through some type of an incentive in the sale of the unit to a person that would take the historical building and put some life back into it. So that was, I just wanted to let you know my stand as a citizen on the destruction or non-destruction of those units. Thank you very much.
Can I make a comment?
Sure.
I think that I think we all have the challenge of respecting the buildings and the history and the heritage, and I think that it's a back and forth discussion of what's practical to do and how to pull that off. I do think that it's a very valid point. If there's grants available, I don't think anybody. I'm hoping that no one is just looking to tear anything down, and I have heard no talk of that at this point. But we value, I believe we value what's here, and we're doing the best we can to retain that where it's feasible.
Yeah, I mean, Mr. Willard's the only one that's mentioned tearing anything down lately, so, all right.
Would anyone else like to make a comment? Hearing no additional comments from the public, this time I will close the public hearing for the 2014 tax budget.
Okay, does anybody need a minute?